presentation can also see some charts. I like some of the suggestions that I've gotten. One person says, put on a movie while we wait. All right, Morgan, do me a favor, my man. If you can tell these folks how to make it full screen just so that way they can see it, either type it in there.
Yeah, everybody. If you click, if you look at the top of your screen, there's a little icon at the top center that has 4 arrows going to each corner. You click on that, and that'll make it full screen for you.
All right, good stuff. Well, I got to tell you, I've been looking forward to this for really the last couple of days. When I found out about it a couple of days ago, an understatement, you guys can tell. For everybody here, I am a currency trader. My name is Sean Beecher. I'm actually getting in contact with you today, talking to you guys today on behalf of an organization that I am uber familiar with. It's an organization by the name of Market Traders Institute. They are a currency educator. I'm going to tell you guys, because of everything that's kind of taken place today, you know, I think the best thing to do here is let me give you enough information that you can make an educated decision for yourself about what this company does. And then if this is something that you guys are interested in, you know, coming and communicating with us a little bit more, literally at the very end of this presentation, we're going to host another presentation where we'll go a bit more in depth. One of the things that I love about Trading Pub, and we're very fortunate, I'm very fortunate, I get to deal with people like you, folks that have a genuine passion for trading. One of the things that I love about Trading Pub presentations is that most of you guys are reasonably intelligent as traders as it is. You guys know some vocab. You guys are interested in, you know, in figuring out, hey, can I find a good market to trade? I'm going to tell you something. I personally feel, and you know, they gave me these topics. I'm going to go over these topics with you. But guys, one of the things I'm supposed to discuss with you is factors that distinguish the Forex from other markets. All right, so for everybody here, let me tell you the real reason that I'm 36 years old, right? I'm a young dude. I have been trading for 20 years. I'll do the math for you. That means I started trading when I was 16. For all of you with me in this presentation, I bounced around. I've been through a number of different markets. And I'm going to share this with you, and a lot of folks won't admit this. For 10 years, I was terrible as a trader. I sucked as a trader. I was horrible. Ironically, while I was horrible as a trader, I worked for a company by the name of Dean Witter Reynolds. They were one of the largest brokerage firms in the United States. I worked in venture capital for one of the largest venture capital firms in the Southeast United States. I did all of these things while I was a terrible trader. Now, obviously, I'm not here today because I've been a terrible trader for 20 years and it's gotten me this far. Ultimately, what ended up happening is I come across this company, Market Traders Institute. I'm not going to hammer you guys with all kinds of information. What I will tell you is this. Market Traders Institute is a 20-year-old company, right? 20-year-old company. And Ford, I love what you're typing in. Ford types in, traders fail because they buy in a downtrend. Oh, I'm going to put this up here because Ford, I think that is like ingenious. Traders fail because, don't laugh at my spelling or my typing, because they can't identify trend. Let's just call it that, right? So we're going to keep this on our screen. We'll talk about this. One of the things I'm supposed to tell you guys about, though, is what makes currency trading different from all these other markets. So let's talk a little bit about what makes currency trading different. The first thing I want to do is I want to find out, humor me, for everybody with me in the presentation, are you guys traders? Anybody in here ever trade? If you trade, wake up. I know you kind of fell into this coma where it was silent and the screen was blank. Come on, if you trade, wake up. Let's get some yeses into this question section. I want some life. Very good. And I love JS, who says trying to. Miguel is a yes. Daryl is a yes. Or maybe Darrell. Could be one of the two. For everybody with me, do we, if we're a trader, do we like predictable markets? Yes or no? Do I like predictability if I'm a trader? I agree with everybody hammering in those yeses. I like predictable markets, right? Can we all also agree as educated traders, there's no such thing as a guarantee? What we're doing is looking for the highest probability trades. Everybody agree? Very good. Now, if you're a little vague, maybe you're a novice trader, maybe you're unsure. I mean, take a look at what you do for a living. Humor me. For everybody with me, type into the question section. Give me an idea. What do you guys do for a living? You can make it up. It doesn't even have to be honest. But for everybody here, give me an idea. What do you do for a living? Engineer, business owner, retired, architect, trading, design. I make money. I'm a broker. I got a gigolo in here. I like it. Retired, photographer, trade options. lorry driver, so you're joining us from across the pond, truck driver, librarian, fantastic. So I've got a number of folks with me. You guys all come from different backgrounds. What I want you to understand is even in all of your jobs, in every single thing that you do now or that you were retired from, we rely on predictability. I'm going to use JS as an example. JS pops in, I'm a granddad. As a parent, can we agree that we rely on predictability to take care of our children? Would you guys agree with that? Would you guys agree that, hey, as a general rule, we don't let our kids play in the street because, hey, odds are if you play in the street, you're going to get hit by a car. Oh, here's a really good one. Shankar types in, I'm a doctor. Doctors do a lot based on probability. Oftentimes they don't know what's really wrong. They say, hey, there's a 95% chance that this is probably what's going on. Let's prescribe for this. For everybody with me, my point in sharing this with you is that the currency market is the largest market in the world. Why is currency trading different? Well, give you an example. How many people here know that the U.S. equity market will do somewhere between $200 and about $400 billion in a day? How many people here know that that's the volume of the U.S. equity market? That's the largest equity market anywhere in the world. It does literally about $200 to $400 billion exchanges hands every day in this market. It's a big market, right? However, and I like this, Antonio knows that the E-mini S&P market is bigger. The commodities market oftentimes in individual days will do more volume than the equity market. But here's the thing, guys. Here's the Forex market. Why is the Forex market the big boy? Why is the Forex market where you should be? Well, how about this? How about if I had 5.4 trillion, not a P in there, trillion reasons. What if $5.4 trillion exchanged hands in the currency market? Now, can we all agree that a $200 to $400 billion market, that's a big market? But one market that does over $5.4 trillion in one day, man, that's really a huge market. Can we all agree to that? I mean, dramatic difference in size, right? So here's the thing I want everybody to comprehend. Ladies and gentlemen, I like it. Some of you guys are typing in, oh, this makes it more liquid. You're absolutely right. It's a more liquid market because there's more money exchanging hands. It's got more liquidity. But the other thing that's really important is this, all right? For everybody with me in this presentation, it takes a lot of money all at the exact same time to come into the market, and that money needs to be moving in the exact same direction in order for the market to move. So here's the thing that I want you to think about. If this is a $5 trillion a day market, can we all agree that in a $5 trillion a day market, it takes a whole bunch of money to make the market go up? It takes a whole bunch of money to make the market go down. Everybody agree? Now think about 5 trillion. Can we all agree that $1 million isn't very much money in a $5 trillion a day market? Can we agree that $100 million really isn't that much money in a $5 trillion a day market? Can we agree that even $1 billion, which customarily, I mean, that gets you on the Forbes top 500 list, right? Even $1 billion is still not a lot of money in the currency market. It does 5 trillion in a busy day. Now, this is a huge, huge advantage. The reason is, ladies and gentlemen, it must, by design, be more predictable. If it is not predictable, traders would not know when other traders were getting themselves in and getting themselves out. Now, for everybody with me, is the logic behind the concept of what I'm explaining to you sinking in? If it's a huge market and it takes big money, most traders don't have that big money by themselves. I don't care what you manage. You probably don't manage $5 billion, right? That means that it takes a lot of people all at the exact same time getting in and getting out to create concise market movement. And what I've got here, do you guys see the little pencil here on my screen? I see how my cursor's turned into a little pencil here. So when I talk to you, and JS types this in, JS says, I never really thought of that. For everybody here, this is the US dollar versus the Canadian dollar. You can see me kind of looking at this up at the top of your screen. Now, as a currency trader, we trade one country's currency against another country's currency. What I have this little pencil thing, you'll see when I draw a rectangle here or a box on your screen, that all kinds of information appears in the top left. Now what this is this is a BI or box instrument tool, and Ajay says in short, no manipulation. That's one of the huge advantages of $5 trillion a day. Good call. For everybody here, A really good question. And Shelby says, okay, is the $5 trillion for all of the pairs, or is it broken down? It's broken down. Very good question, Shelby. We answer all that stuff for you. For everybody here, what I want you to see, and again, I'm just trying not to take up too much time. If you're interested in the stuff that I'm talking to you about, very, very important. We'd be more than happy to talk to you. We're going to talk to you right at the conclusion of the presentation. One of my associates actually put a little link in there. So if you are hearing my voice and you're saying, man, I got to get more of this, right afterwards, I'm going to run for probably another hour or so. There's some awesome trade setups. I would highly recommend you guys get in there. My man Tyler in the office is putting it in there. And I do want to let you guys know, I'm going to be sharing with you information about Market Traders Institute. One of the things you'll notice about me, I'm a little bit more nonchalant as a presenter, primarily because, guys, I'm going to let the organization prove it to you. I'm not going to try and impress you with my vocabulary and how proper I sound. For everybody with me in the presentation, Market Traders Institute is the only foreign currency educator anywhere in the world that has their education taught in colleges and universities. They've been around for 20 years. They've got tens of thousands of clients around the world. I don't need to, impress you guys with facts. They do that themselves. What I want to impress you with, however, is how they can help you make money. Does everybody see in the range category up here in the top left-hand corner where it says range equals 0.0247? Everybody see this? Everybody see this? And Arthur says, you do sound quite nonchalant. Listen, guys, I'm going to tell you something. Oftentimes people that don't make money think that you have to be really stern and it's got to be really serious and it's got to be really boring. And there are a lot of people that grow up their whole lives and that's how they think they make a living. The reality is I don't know, maybe I was blessed with different parents or maybe I grew up in a different atmosphere, but the concept of making money was never a challenge to me. It wasn't that I grew up wealthy by any means, believe me. Exactly. BH types it in. He says, I just can't do boring. I'm the same way. I can't do boring. Let me show you what I think is exciting, the opposite of boring. Can we all see 247 in the range category? Do you guys see 247 pips? Now, one of the things I want you to understand, there's all kinds of little vocab things. I talked to you about all this, but in the currency market, we trade trying to capture something called a pip. If you're here in the US, it's really easy to understand what a pip is. It's 1/100th of a cent. If you're outside of the US, if you're using centimes, if you're using pence, whatever it is, if you could just imagine 1/100th of a penny. Now, the way that it works is if you take a roughly $2,000 investment, I know I have a lot of options traders and commodities traders with me. For everybody here, are we comfortable taking $2,000 investments, but wait, don't answer that yet, with a risk of $500? Maximum risk of $500. Would you take a $2,000 investment with a maximum risk of $500? Antonio says, man, if we could count your words per minute, we could easily beat the 5 trillion. My man, I'm actually going slower for you. For everybody with me in the presentation, now, here's the question, and here's where you start caring a lot less about my tone, a lot less about me being nonchalant. What if I could show you a way to conventionally risk $500, but show a reward of somewhere between $2,500 to $5,000, and I could show you how to do it on a consistent basis? How many people could care less how old I am? Could care less about how quickly I talk? How many people could care less how nonchalant, or how many people here say, look, man, you teach me how to do this on a consistent basis, I'm putting you on the Christmas list, man. You're making the holiday list. I'm sending you birthday presents. For everybody with me in the presentation, show you how it's done. The best part of what you're going to see, the reason that most of you are going to say, man, I got to join you in the next 15 minutes when we start this next presentation, is I'm going to use some words and all of you are going to get it, right? All of you are going to get it. So here's a simple one. How many of you know that the trend is your friend until it ends? If you would agree with this statement, please type in the letter Y for yes. It's like, whoa, I've heard that one before. What did I do with my water? There it is. Very good. Trend is your friend until it ends, right? Now, can you guys see up here? I don't remember who it was, but somebody made a genius statement, said, traders fail because they can't identify the trend. Now, I was going to hold out on you. I wasn't going to show you these last two candlesticks, but this is such a profound statement that I owe it to you. I got to talk about this. Can we all agree that my yellow circle is circling the lowest point on my charts with the Japanese candlestick? If you agree, I am less work, right? Hit the Y button and enter. You don't even have to type in the whole word yes. For everybody with me, can we agree that what the market did from this point is it went up and it made a high? Then it made a low, then it made a high, then it made a low. Can we all agree that up to this point, I mean, the market movement has been pretty straightforward? You could teach your kids to do this, and in 5 minutes they could go, yeah, mom and dad, there's your high, there's your low, there's your high, there's your low, right? Nice and simple. Can we all also agree that trading is rarely, if ever, that simple? And yeah, while your kids might have been able to nail that one, the next thing they would have done is they would have gone, oh, wait a minute, but this high was higher than this high, so there's my new high. And then this is my new low because it's higher than that one. And then this is my new high. And then this is my new low. Now, how many of you in here, kids and yourself included, are going, oh, but wait a minute. Then the market made a lower high. Now we're in a downtrend. How many people here think we might be in a downtrend? Now, here's just a nice, simple example. If you're a yes, a maybe, or me, you owe it to yourself. You're wrong, right? You're dead wrong. But you owe it to yourself to accept the fact that you're wrong and learn from your mistakes. Put it in there. Right? I hate comparing trading to like an Alcoholics Anonymous meeting. But just in general, ladies and gentlemen, can we all agree that you can't make progress until you admit that you're doing something wrong? We all agree to this? Is it fair to say that there are quite a few folks in here that might be doing something wrong? I mean, you're not seeing the results. You guys interested in getting some help? So let me show you one piece of technique. And I want you guys to understand, the trading process can be phenomenally easy or it can be phenomenally difficult. Do you want to know one of the primary ways that professional traders make trading easy? They understand something called an order of operation. How many people here are familiar with that concept of order of operations? You might remember it from like grade school. We used to say, please excuse my dear Aunt Sally. For everybody here, that was like the mathematical order of operations. If you're not familiar with the concept of order of operations, I'm going to give you a really simple example. I like to grill, right? I like to grill food. So the order of operations is the very first thing that you do is you lay the charcoal in the grill, right? I always use charcoal. I don't use propane. So then you got to hit it with the lighter fluid. Then you got to light it. Then you make sure and put the lid on, all of these things, order of operations. If you knew the order of operations to trade, I'm going to tell you that I think you could be a much better trader. Now, here's an example. How many people in this presentation start out, and because the trend is your friend, you immediately look for trend, and think about this. How much weight do we put on this? We immediately look for trend, and then we say, okay, well, it looks like I'm in a downtrend, so I should sell. Or it looks like I'm in an uptrend, so I should buy. How many people here realize that in your personal order of operations, the very first thing that you do is identify trend? How many people in here would agree that that's the case? There's Peter, there's Herman, Himanshu, Miguel, Christopher, Van, Donald, Nath, Michael, Peter. For everybody here that's typing in your yes, this is great. Except, here's the problem. Ladies and gentlemen, can we all agree that what we're looking for as a good trader is actually something called confluence? How many people here know what confluence is? Anybody here know what confluence is? Now, for those of you that do know what confluence is, you're right now going, oh, wait a minute. This guy's actually pretty smart. For everybody here, what confluence is where you can identify not just random things in the market, but key points in the market where the market is telling you, hey, it's either time to buy or time to sell. Now, for everybody with me, what if I were to tell you that there are 4 phenomenally important, unbelievably relevant buying signals on your screen right now? What if I were to tell you that there are 4 of them right now? All of them are screaming to buy. See, for everybody here, this is what Market Traders Institute does. They say, hey, look, maybe you know the vocab, maybe you know how to use this stuff, whatever the case may be, maybe you're a complete novice. We can still help you. For everybody with me in the presentation, I'm going to get all these lines off of your screen. I'm going to go ahead and I'm going to put this one back up here. Now, if you know what a trend line is, all of a sudden, everybody that thought we were in a downtrend, can we all agree that the only way that the market can make a downtrend is if it breaks through this blue line? Well, we all agree. We know what a trend line does, right? Can we all agree the only way the market starts going to the south, it's got to break this trend, and man, if it did, then I would be forced to agree with you we'd be in a downtrend. Can we all agree with that? Can we see how with just a trend line, we're immediately going, oh, maybe we're not in the proper direction. Maybe we're not selling. For everybody with me in the presentation, let me go ahead and let me show you something else. This is just one simple thing. Now, I'm bouncing off of a trend line. The market goes up, comes down, hits my trend line, it bounces, goes up, hits my trend line, bounces, goes up, hits my trend line, bounces. This is what we're looking for. Okay, and I like this. Here's another really good question. Tom says, you draw the trend off the tails and not the body? So here's another interesting one. How many people in this presentation draw your trend lines off of the body of the candle, not the tail? How many people do that? You just answer. I got some people typing in no. For all of you with me that are typing in yes right now, or Glenn who says I like to do both. Ladies and gentlemen, if you're not drawing your trend lines properly, meaning if you're drawing them off of the body and you shouldn't be, which pretty much is the case, you're going to get stopped out a lot. Here's another one. So here's another one. Somebody says, oh, I like to put it where I get maximum number of touches. So let me give you a very, very simple explanation here. If you're with me in this presentation and you draw your trend lines wrong, let me show you how devastating this can be to you. So, okay, you don't draw it across the wick, you draw it across the body. So your very first one you're looking at like this and you're saying, okay, right here across the body. In this instance, it might not be that big of a deal. But what about, I won't bring it up. If you guys are interested in more, I'll show it to you. I don't want to bog it down. For everybody here, let me show you the 4 things that you should pay attention to. You always, by the way, always want to draw your trend lines along the wicks. Along the wicks. If you draw your trend lines along the bodies, ladies and gentlemen, it's going to force you to take more risk in a trade. Now, let me ask all of you a question. Here's where we decide how you guys want to roll. For everybody with me in the presentation, you tell me, do you want to get yourself involved in more trades with more risk or fewer trades with less risk? And I know that might seem like, you can type in an M for more or an F for fewer. And I know you're sitting here going, well, wait a minute, who picks more trades with more risk? Believe it or not, there are a lot of folks in here, you may not realize it, but for you folks that are dissecting your candlesticks like this with your trend lines, the only reason you would do that, and I made that mistake, yes, in the name of Rupert Murdoch, less risk. I like it. For everybody here, if you're intersecting, it's because you feel like, oh, my trend lines, the market moves before my trend lines, so I'm going to start intersecting these candles. For everybody here, just you don't want to intersect candles. Let me show you something else. How many people here use Fibonacci? Here's one that's kind of cool. How many of you here use Fibonacci? Any Fib traders here? Oh man, I'm going to tell you, this guy is awesome. Right, this guy made me makes me a whole bunch of money. Leonardo Fibonacci, Italian mathematician, really, probably a really boring dude, actually, truth be told. But either way, I really don't care about his social life. He has been phenomenal. BH types in love the fibs. I'm going to get this off your screen. Let's just talk about cool, right? Let's just talk about something that's really cool, right? To me, I'm young, 36. It doesn't take a lot for me to think something's cool. What do I think cool? I think cool would be being able to identify that I should buy here and take profit here. I think cool would be if there was a tool that said, hey, Sean, I know you're not the brightest guy in the world, right? But I got you. I got you covered. Look, you buy here. You get yourself out up here. For everybody with me, you tell me if there was a tool that said, hey, look, you should be buying right now and you should be taking profit like way up here. How many people in here would like to have a tool that accurately predicts when to get in and when to get out? Anybody here interested in one of those? So I am here to tell you that it exists. Professional traders have been using it for over 4 decades. It is a mathematical certainty that takes place throughout nature. It's all kinds of cool stuff. For everybody with me, I am supposed to be telling you not only things that are different about the currency market, but also top trading techniques. And what I'm going to do here, and if you want more, Brad says, does it pick lotto numbers? I don't know, Brad. Be careful what you ask for. Someone will come up a way for fib numbers to pick lotto numbers. I'm going to show you what Fibonacci does. I'm going to show you real easy. And then again, if you want more, guys, I'm going to be done here in probably the next 3, 4, 5 minutes. I'm not going to take all the time. If you guys are interested, I believe I'm the last presenter. If you guys are interested, just join me in a presentation. I'll get as intense as you guys want. Real quick, what I want to do is I want to tell you a little story. I want to tell you a story about the way that the market moves. The market started out one morning. It was a Saturday morning. It started out one morning about here at point A. Let's call it the market's home. And through the course of the day, what the market decided to do is it didn't want to stay home anymore. The market said, hey, I want to go out. It's Saturday. I want to go play. Ladies and gentlemen, the market did go play. The market traveled all the way up to point B. Now, for everybody with me in this presentation, what I want you to understand is this. The distance from point A to point B, that's 100%, okay? Market said, I want to go from point A to point B, and when it got to point B, it got 100% of the way to its destination. What traders have done with Fibonacci numbers, and these are numbers that naturally take place. Traders created all the rest of this stuff. What traders do with these Fibonacci numbers is they say, hey, look, we see specific consistencies in the market around these Fibonacci numbers. Now I'm going to zoom in because I trade off of a really huge monitor, and I know a lot of you folks don't. You guys see this green line right here that says 38.2? Grab you. You guys see this one? 38.2. And then we've got the green line, and then 50.0 and the green line, and then 618 and the green line. And you can't really see these, but these also have coinciding color-coded lines. So for everybody here, the reason I told you my little cheesy story about the market was because I want you to understand what Fibonacci does. Fibonacci says that when the market goes from point A to point B, it moved 100% of the way to where it was going. However, at some point in time, the market is going to fall back down and retrace, and at about 38.2% of the way back to A, at 50% of the way back to A, at 61.8%, at 78.6%, at 86% of the way back to A, the market has a really good chance to aggressively bounce to the north. Now, here's the rule of Fibonacci. For everybody with me, if the market comes down and hits a green line, the bounce should go up to the green line. If the market hits the orange line, the market should bounce up to the orange line. And if the market hits the blue line, guess where it should go? Up to the blue. For everybody with me, I'm going to just pop this up here on your screen. We all see that the market went from point A to point B. That's 100% of the journey. Then it came about 61.8% of the way back. And then can we all agree that what the market did is it aggressively bounced all the way back up to my green line? Did we get a green line to green line bounce? How many people are seeing green line here to green line here? Man, that's exactly what the market did. How many people are noticing this? Now, what you're starting to notice is why professional traders, and I want you guys just to understand this. Banks, brokers, lending institutions, they make phenomenal amounts of money on accident in the currency market. I haven't ran into a lot of people that have read this, but I would encourage you, go on to Bloomberg.com. They had an article about this. For everybody with me, Bank of America last quarter, all right, this is new data. Bank of America last quarter made over $130 million trading in the currency market. That's not impressive. Let me tell you the part that's impressive. They did it on accident. For everybody with me, on accident, last quarter, Bank of America made $130 million in the currency market. Now, what they do is they were using the currency market to hedge. Well, hedging is not a technique that you use to generate profit. Hedging is a technique that you will conventionally use to protect against losses. Well, they were hedging and accidentally made $140 million. For everybody with me, how could you do that? Well, can we all see that what the market does is the market goes up, it hits my 618 or my green line, and what the market should now do is the market should fall. Can we all see that that's exactly what the market started doing? Next thing you know, the market is really predictable. It's following the rules. Take a look at what ends up happening next. The market then starts falling back down. Now, can we all agree that if this market came back down and hit a 618 Fibonacci retracement again, this would be unbelievably coincidental? I guess we could call it a coincidence, right? And Alexander says, do you guys scalp as well? This is too large of a time frame for him. We absolutely do scalp. We trade on 5 and 10 minute time frames. All of that's gone over in the full presentation after this, and I can show you guys a bunch of different examples. One more time for everybody with me. I'm just making sure this volume is working. Can we all agree that if the market comes down to the 618 retracement, once again, that would be a pattern. That's what it did last time. I would want to pay attention to that. Do we all agree? Very good. For everybody with me, did the market come back down and hit my green line? 618 retracement. Did the market react to my green line? Now, this is the thing that I want you to understand. We started out with, hey, what makes currency trading different? And I said, hey, this is a $5 trillion a day market. And because of that, Traders in this market require very clear patterns so they can figure out when everybody else is going to get in and everybody else is going to get out. It's non-optional. These patterns must be clear. Can we see that what the market did is it went up, came down, hit a 618 Fibonacci retracement, and that also just so happens to be where this blue line, which is my trend line, where the market bounced, and then, hey, wait a minute. How many people here are noticing that at this 618 retracement, at my trend line, the market also reacted? How many people here are starting to see something that I typed on your screen, a little something called confluence? When multiple signs tell you that it's either time to buy or time to sell. Now, can everybody see what the market did? And I'm going to draw a little line here so you guys can see the market went up and she came down in a 618 and then to my green line here, right? And she went up and she came down, and from the green line, she's supposed to go up to the green line here. Then what did she do? Well, she came back down, and ladies and gentlemen, let's just take a look. Now, for everybody with me in the presentation, I'm going to remind you, it is a $5 trillion a day market. I make a good living, but I can't make this stuff up. For everybody with me in the presentation, let me just go ahead and move this. Do you guys see the red arrow? This is current live market. This is 2 candles ago. Can we all agree that for the third time right here, just recently, the market went up, came down, hit a 618, and went up. Went up, came down, hit a 618, and went up. Went up, came down, hit a 618, and how many of you are even remotely familiar with Japanese candlestick? Can we agree that, man, this thing was flying to the south, and then the whole world hit the brakes? It sure looks like something funny is going on here, and this could be the beginning of a morning star formation. How many people in this presentation are noticing there's something going on with this technique that I'm showing you this morning? How many people are noticing this? And Greg says, double doji, probably going up. Look, I'm going to tell all of you, I don't care what knowledge you have in your brain right now, as long as that knowledge is pointing out to you, hey, this thing has a really, really good chance to go up, right? Now, for everybody with me, can we all agree it doesn't have to go up, but it has a really high probability of going up? Everybody agree? Doesn't have to, really high probability. Can we also agree that if it does not have to go up, if it could go down, that as a good trader, as a good investor, as somebody with just some common sense, if it could go down, I should protect against losses? Can we all agree? I'm going to buy a home, I'm going to do a termite inspection, right? If I'm going to buy a car, I'm going to take it to a mechanic, have them look it over, right? I'm going to get myself involved in a trade. I want to make sure that I'm not taking on too much risk. Now, for everybody with me in the presentation, here's the thing that I think makes MTI different. Now, I want to apologize. I probably got all of the previous presenters with me. I didn't get an opportunity this morning to hear what the previous presenters said. I'm not taking shots at anybody, but I want you guys to understand something. In most presentations, I'm the only presenter, right? In most presentations, what I tell people, and this is the truth, you guys, you come to these all the time, right? How many people have been to a Trading Pub presentation before? You've joined web presentations before in the past. You're not a rookie at this, right? This is old hat to you. This ain't your first rodeo, right? So I'm going to tell you what I see consistently. And I know Greg says hundreds. So Greg, I'm going to use you as a litmus test. For everybody here, you guys tell me, how often do you come into these things? They show you awesome stuff. They show you awesome stuff just like what I showed you. And then they leave you, and they say, now if you want more, give me some money, and I'm going to show you the way that it really works. How many people here would agree they show you something awesome, your eyes start to open, and then they turn the lights off and walk away? Right? That's what they do. It's a teaser, right? The industry has been created this way to create these teasers, right? I'm just going to show you enough, and then you're going to give me a few $100, and I'm going to show you the rest. I don't think that's fair, right? I personally, I don't think that's fair, right? That's where I'm going to leave it. Ladies and gentlemen, let me show you the whole strategy. For everybody with me, if you're going to trade, if you're a novice in here, and no one has told you this, you don't have to send me a check. Just remember what I'm telling you. It's the best advice you've ever gotten. You should always, 100% of the time, you should trade with a stop loss. Now, for everybody with me in this presentation, a stop loss is not like, oh, I'm going to draw a red line right here, and this is going to be my risk. For everybody with me, the reason that most retail traders, most novice traders don't trade with a stop loss is because they don't understand how to properly set one. They randomly set a stop loss. They get stopped out a bunch of times, and then the market does exactly what they thought it was going to do. And they say, oh, well, To hell with that stop loss. I'm just going to figure it out without one. How many people in here would agree that's the reason you don't use a stop loss? You used to use it. You got stopped out a bunch of times, but the market did exactly what you thought it was going to do. So you said, no, I don't need this stop loss thing. I'm going to just trade without one. Yep, exactly. So I've got okay, been there, done that. Valerie says been there, done that. JS says yes. Guys, the stop losses are imperative. And Donald says, what about the cheating brokers? For everybody with me in the presentation, let me show you the right way to draw a stop loss to where it doesn't matter what your broker is or who they, what they do. They can't come and get you. They're not going to come and get you. For everybody with me, let me just put my red line right here. Now, I know this might look like, oh, you just arbitrarily placed this red line here, but that's not true. I did not arbitrarily place this red line here. BH says you can't put your stop too close because you got to have some wiggle room. My man, that or woman, those are the words that I would have used. You got to have some wiggle room. For everybody with me in the presentation, and Antonio says they expand the spreads at will. For everybody here, I haven't shared this with you, but I was the vice president. Listen to what I'm about to tell you. I was the vice president of one of the largest foreign currency specific brokerage firms in the United States. So for everybody here, BH, Antonio, or not BH, Donald, Antonio, you guys tell me about brokers. No, not Oanda. You don't have to tell me anything about brokers, all right? And the way that it works in the currency world, just to be clear, it's not like the equity world where you walk down a hallway and there are 500 vice presidents. It doesn't work that way. For everybody with me, I was the vice president, okay? I know the way these brokerage firms work. I also know this is the reason that the strategy works. For everybody here, can we agree that the reason that I got myself in, this black line, this is a buy because I'm in an uptrend making higher highs and higher lows, and if that's the case, I should lean more toward buying than selling. Would everybody agree with that? Come on, it takes 2 seconds. There you go. Can we all agree that I'm also potentially buying because of a 618 retracement? The market went up and hit this green line and bounced to the green line, hit the green line, bounced to the green line, hit the green line. I want more of that, right? Can we all also agree that part of the reason I'm getting in right now is because, hey, just like here and here and here, I've got this trend line touch. Do we all agree with that? Now, here's where I show you something where you're like, man, I always knew that was relevant. I just never knew how to use it. How many of you guys are familiar with support and resistance? Can we all agree that my black line, and I'm just going to get my red line out of here for a second. We all agree my black line is a phenomenally important level of support and resistance. The market went up, hit its head and fell, hit its head and fell, hit its head and fell, hit its head and fell. Then it was the floor. It bounced, it bounced, it bounced, it bounced. Then it hit its head. Everybody see this? So let's just zoom in. Is it a coincidence that that's taking place on my 618 retracement? Is it a coincidence when I zoom out for my next black line that that's taking place? Floor, 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 ceiling, ceiling, ceiling on my 618 retracement. When I go to my first 618 retracement, ladies and gentlemen, is it a coincidence that my most severe levels of support and resistance are also showing up on my Fibonacci? No, it is not. Can we agree that if I'm in a market where I'm in an uptrend, that means buy, bouncing off of a 618 retracement for a third time, that means buy, bouncing off of a level of support and resistance for a third time, that means buy, and hitting a level on my trend line for a third time? Can we all agree, man, this is pretty clear buying indication? How many people here are thinking, golly, I might want to buy? Anybody thinking that? How about this? Let me make this even easier for you, right? What about if I were to show you my red line again? Because this red line represents your stop loss. Now, I just identified for you all of the reasons I got into the trade. Can we all agree that if all of the reasons I get myself into the trade all fail me, that I wouldn't want to be in this trade anymore? You guys agree to this? Like let's just say the next candle comes out, right? Tomorrow's candle comes out or Sunday's candle comes out, and this thing goes wham, and it comes all the way down to my blue line or my red line here. Can we all agree that if the market now travels down to my red line, the only way that it could hit my red line is if it broke through my Fibonacci retracement? That was one of the reasons I was buying. If it broke through my support and resistance, that was another reason that I was buying. If it broke through my uptrend, that was another reason that I was buying. And ladies and gentlemen, if it breaks through my trend line, we already identified that this market should turn around and sell itself off. It should be a trend reversal. Can we all agree that all four of the reasons I would have gotten myself in would have all failed me at my red line? I wouldn't want to be in this trade anymore. Can we all agree to that? Now, for some of you in here, you're going, wait a minute, that is the most logical, common sense reason I have ever gotten to set a stop loss. I am going to apologize to you. I don't know why you haven't heard this before now. Ladies and gentlemen, if the reasons you get yourself into the trade fail you, don't stay in the trade. Now, we've heard cut your losses short and let your profits run, but oftentimes that can be really difficult to do unless you know how to use Fibonacci. Fibonacci just says, hey, look, man, the way this works is it's supposed to go from green line to green line, and you saw the previous 3 times that's what it did. For everybody with me in the presentation, if the market follows the rules, if it does what it's supposed to do. You guys remember this BI tool? The thing that told you all the information in the top left? For everybody with me in the presentation, what would my risk be? I get on the black line. My red line's right here. Do you guys see my risk in this trade is 67 pips? How many people see that? 67 pips. Now, I want you guys to stop here for a second. That's 67 pips. Now, each pip, all right, each pip, and I'm going to answer these questions, each pip in the currency market is worth $10. Now, can we all agree that that is $650 worth of reward, or $670 worth of reward, excuse me. $670 worth of reward. Everybody see it, 67 pips, 67 pips at $10 a pip, you would have made $670. See, I told you I wasn't a good typist. $670. Now, what I want you guys to understand, and minus commissions, and for anybody here wondering what commissions are, they're conventionally about $30. For everybody with me in the presentation, so what we've got is we've got a market where each pip is the equivalent of 1/100th of a cent. On a roughly $2,000 investment, I would be risking $670. Everybody see this here? Move this over here. On a roughly $2,000 investment, I would have a risk of $670. However, my reward, my potential for reward is about 741 pips. Now, again, just make sure we all agree with the math. 741 times 10. We all agree that is, let's see here. I was pretty good at math. $7,410. Everybody agree with that? Question. Here's where we figure out whether or not it's worth it to you to invest another hour and come join me. For everybody with me in the presentation, you tell me, would you risk $670 to make $7,410? Now, I don't care what your answer is. If your answer is yes, you can see the link on your screen right now. You owe it to yourself to join us. What Market Traders Institute does is they show you, hey, look, guys, these opportunities, they take place all over the place. It's how this market gets traded. It's the only way that $5 trillion can be monitored through the market. Now, for everybody with me, I've got my folks back at the office. For all my guys in the office, can you guys put that link back up there one more time? Please put that link in there. Just keep popping that link in there. For everybody with me, you're going to see a link pop up there. My man Tyler put it up there. Morgan's got it up there. You guys are awesome. Thank you. Guys, click the link. Join me. I might only take 45 minutes, but I guarantee you that the information that you're going to get, if you thought any of this is exciting, relevant, different, new, and let me make sure I answer these questions, right? Factors that distinguish Forex from other markets. Well, I'll tell you the big factor, you can make money in this market. No offense to these other markets, but ladies and gentlemen, what you need to make money is volatility. Volatility. Ladies and gentlemen, the currency market is chocked full of volatility. What you also need, top trading techniques, you need ways, and I don't care what market we're in, can we all agree we need ways to cut LOSSES, losses, and let profits run? We all agree? And that's what I'm looking for. I want ways to cut my losses and let my profits run. So what do? You run around, you look for strategies. You say, man, I got to find these strategies. They got to teach me how to cut my losses short and let my profits run. But you never find them. You look, you can't find them. You ask, you can't find them. You tell people, hey, show them to me. They don't show them to you. Ladies and gentlemen, did I just show you a strategy in about 15 minutes? And it really only took about 5, but to cut your losses short and let your profits run. Now, I got 407 people with me in this presentation. I did not wake up this morning, come out and waste your time. Can we agree? Has this not been a waste of time? Is this worth it to you guys? Can you guys see, and let me just kind of put this into perspective. The first time that you identified that market bounce, that 618 bounce, do we all see in the top left-hand corner that the market moved 523 pips? That's $5,230 the first bounce. Let's take a look at the second bounce. We know it was a 618. Second bounce went $6,200. Now, for everybody with me, let me just make sure this is hitting home. I would have bought on the black line because, hey, that's where all of my confluence came in, right? Those are all the reasons to get myself in. Let's see, I would have set my stop below that, and then I would have set my limit at the green line. Green line. Let's see, ladies and gentlemen, you tell me. If we could teach you how to get yourself involved in trades that consistently have 47 pips worth of risk, but about 540 pips worth of reward. What do you think? What about this one, ladies and gentlemen? Can we all agree? Golly, Sean, using that trading strategy, kind of a cool thing you got there. One of the things that I'm noticing is that if I move to your next 618 Fibonacci retracement, exact same thing. Guys, listen, this is what I'm going to do. I'm going to get this other presentation started. For everybody with me in this presentation, I'm going to sign off now. I don't want to take up any more time. We are ready to get going. I want to say thank you to everybody joining me, especially you folks at Trading Pub today. For all of you, Morgan, awesome job. I know you guys had some technical difficulties. It's always an honor and a pleasure to be in front of you guys. If you guys are interested in figuring out how we scalp, we do it short term, we do it long term. Guys, I'll show you one more thing. Morgan, I promise I'm only taking 10 seconds, my man. If you want to figure out how to automatically get yourself in and out of trades, $780, then you lost $250. Then you made $660, you made $130, you lost $20. You made $370. For everybody here, I hope to see you in the next 10 minutes. Morgan, my man, I appreciate it. I'm not going to take up too much time today. All right. For every